Hey, welcome back to the Smart Money Bootcamp. My name is OZ from OzFx, and today we have a lesson that I've been waiting to do. A lot of people have asked me for it. A lot of people have been waiting for it as well. And today we got an introduction into WYCKOFF. Now, don't get discouraged because I said introduction. There's actually a decent amount of information in this lesson, but if I go and do an entire breakdown from top to finish of WYCKOFF, you're not going to have any idea what you just looked at. So I have it broken down into at least two parts, and the way that we're going to approach WYCKOFF is I'm going to have this lesson that basically gives you all the information on it with examples and definitions and stuff like that, and we will go and look at some WYCKOFF in the charts, but there is going to be another lesson where it's going to be more utilization of WYCKOFF. Alright, and one thing I do really want to mention, and something that I want you to keep in mind before we really get down into this lesson here, is smart money is not just WYCKOFF. WYCKOFF is not all that smart money is. There's a lot of misconceptions that go around that you can't trade WYCKOFF and another element of smart money, or that you have to do this and you're stuck in this section of smart money over here, if you want to say it that way. It essentially makes it become divided. Like, there's WYCKOFF traders, there's price action traders, there's ICT traders, there's supply and demand traders, when at the end of the day a lot of it all does and tells you the same thing. Alright, now I'm not saying that I'm specifically a WYCKOFF trader. I'm not. WYCKOFF is an element of my trading, okay? And that's one way I want you to look at it. Don't just start opening your charts and say, where's the WYCKOFF? Don't do that. That's going to get you tripped up. You're going to get mad, you're going to get frustrated, and you're going to think that WYCKOFF doesn't work, when in fact WYCKOFF does work, but it should be used as a confirmation, in my opinion. Alright, so without further ado, I want to take you to a website that I want each and everybody watching this video to go to and read up on, so that I don't have to explain some of the stuff that can literally just be Googled and stuff that doesn't actually really pertain to trading, but it's good information nonetheless. Alright, now hopefully if you've ever tried to look up WYCKOFF or have ever tried to learn WYCKOFF in the past, you have already been to this website. It's just school.stockcharts.com/all this stuff. Just type in WYCKOFF and look for stockcharts.com, and it should bring you to this article right here. Now, this is the best article that I've ever found on WYCKOFF. It has stuff about Richard D. WYCKOFF in here, 1873 to 1934, and you can see in here that he is a pioneer of the technical approach to studying the stock market. So WYCKOFF originated from the stock market. Now, I'm not going to go through this entire website with you. Just know that there is a lot of information in here, and if you haven't checked out this website yet, go ahead and check this out. Read through this, especially either before or after you watch this video. Alright, if you're already watching the video, just finish the video and then come to this website, check it out. As you can see, there's all kinds of stuff in here, but I'm not going to cover this with you. This is some of your homework. Go ahead, come to this website, read through this. Alright, WYCKOFF, or smart money as some people like to say it. It is a concept published by Richard WYCKOFF. It is an institutional concept, and it is built up of accumulations, distributions, reaccumulations, and redistribution. You've probably heard some of those names before, and some people intertwine them differently with different styles, but I want you to focus on accumulations and distributions mainly. Reaccumulations and redistributions are definitely a WYCKOFF thing. They happen a little bit less of the time, but all of these happen consistently, and they happen fractally. And if you don't know what I mean by fractally, I will break that down whenever we get to the charts. It'll be easier to show you with a chart example. Okay, not all WYCKOFF schematics are going to look the same as the official schematic. WYCKOFF trading has worked for 100+ years and lets us know where the big players are buying or selling. And as you can see right here, I have a example of accumulation drawn right here. We are going to be talking about accumulations and distributions first. They are what you're mostly going to see. Okay, and going back to the not all WYCKOFF schematics are going to look the same part right there, that is because there is this thing that I learned from one of my mentors called the snowflake rule, where essentially the schematics are doing the same thing by principle and by concept, but they might look a little bit different. Not one schematic is going to look like another. All right, essentially Wyckoff is just the accumulation of buyers and sellers by the central banks so that they can manipulate retail traders before taking the market in their desired direction. That doesn't just have to be accumulation, it could be distribution as well. Many people have made their own version, applied their own twist, or simplified Wyckoff, but at the core, it's still Wyckoff. All over YouTube, you're going to see simplified smart money, simplified Wyckoff, and I'm going to draw it for you as well. It's honestly the first way that I was introduced to it as well, but we called it a signature pattern. And at the end of the day, the concepts are mostly the same, but there's a couple of variances in Wyckoff and things in Wyckoff that I believe help you as long as you know them, and it can be beneficial to your trading system. Wyckoff isn't the end-all be-all answer to your trading, but another confluence to smart money. Wyckoff is like a snowflake. It will never look or be the exact same 2 times in a row. All right, the Wyckoff market cycle. You have accumulation, and then you'll have a markup. Then you'll have a distribution, and then you'll have a markdown. This is a perfect world scenario, obviously, but right here we have a picture of it, right? So down here, you have the accumulation, and then a manipulation, which we call a spring, and then a clearing of that accumulation, and then right here is some sort of test, and then this is your markup. This is where the market goes up after accumulating orders to take to the long side, and then the same thing up here. It accumulates sellers to manipulate out right here with the spring, and then the markdown after they've accumulated all the orders that they need to accumulate. But I'm sure if you really go and study the market, you will see that the market does move like this. Richard Wyckoff taught that there is this entity called the composite man. I like to think of this as the central banks. Wyckoff taught that the composite man carefully plans, executes, and concludes his campaigns. Everything in the market happens for a reason. Now, if you really think about this, I've already said this before. I've already said that there is this entity controlling the market, which is smart money. So if that's how you want to think of the composite man, just think of the composite man as smart money. This isn't new. We've already talked about this in the Smart Money Bootcamp, but right now I'm showing you where it originated from. Some people want to talk about where smart money originated from. In my opinion, Wyckoff is some of the earliest implications of smart money. So I think it is important for any smart money trader to come and look at this, research this, look for it in the charts. In my opinion, there are some holes in Wyckoff, but the concepts stand true. The composite man attracts buyers after he has already accumulated his position, trapping public and retail traders in the buildup of orders. The 3 laws of Wyckoff. The law of supply and demand determines the price action. Is supply in control or is demand in control? The laws of cause and effect. That is, how big is the accumulation and how big will the markup be? And the law of effort. That is the markup. Wyckoff schematics. Accumulation manipulates buyers before going higher, manipulation of the lows, and a break of structure to the upside. Literally, that is how simple it can be. We're going to overcomplicate it in this video, of course, just because I want to show you the ins and the outs of these schematics, but when it really comes down to it, that's really all you need to understand, is that it manipulates buyers before going higher, and the manipulation of the lows, aka the early buyers, and a break of structure to the upside. All right. Distribution, a manipulation of sellers before going any lower, with a manipulation of the highs and a break of structure to the downside. You want to look for these schematics during consolidation periods. All right, so here we are. We got accumulation. All right, so you're going to want to take some kind of screenshot of this. You can also look up accumulations and distributions on Google if you want to as well. There's plenty examples of these schematics around here, but what I want to do is I want to kind of break down what some of these points mean, what some of these labels mean, and what's actually going on in this schematic, because I'm sure if you have never looked at this before, you're looking at this saying, what the hell? I don't even want to learn this. It looks too complicated. It really isn't that complicated. It just takes some practice. So this is an accumulation, and this is an example for buying. All right, this is when the market is accumulating buyers to take to the upside. And so what you have here is the market should be recently declining, as you can see in this leg of price action right here. And it comes into the PS, which is otherwise known as preliminary support. Write that down. And the first point, the preliminary support, is the first support that the market finds within the recent decline. So this is where the first stopping action, I would say, and I said stopping action with air quotes. You can't see that, but I did. So yeah, this is the first support that the market finds. It comes up and then it makes what we call a selling climax, or an SC. And this is a potential trap. It's panicking sellers getting into their positions due to the fear of missing out, because we just stopped here and then we broke through it, right? So there's more sellers funneling in this leg of price action right here. But this is ultimately final stopping point before any manipulations happen, all right? Selling climax, it is what it sounds like. The selling stops. And then after the selling climax, you have what we call the AR, or the automatic rally, or the automatic reaction. And it literally is exactly what it sounds like. And the reason this happens is because the selling climax produces an up movement when all of the sellers get out of the market. This automatic rally is an automatic reaction of sellers taking their profits and getting out of the market. Therefore, the market eases up and gives some up movement right here. And then we have this right here, an ST. And you can have multiple STs throughout the schematics. Like I said, not all schematics are going to look the same. This one is a picture perfect one right here. But the ST is the secondary test. There can be more than one, and it comes down from the AR to test the liquidity of the selling climax, and or to test the support of the selling climax. And also what it's doing is it's creating liquidity at the same time right here, because this low respected this low, and then we come up and we make what we call a sign of strength right here. This doesn't always happen, okay? There's not always a sign of strength. Sometimes the sign of strength will be in a different spot as well. But all the sign of strength is doing is taking out these sellers that we already had left over here and showing a sign of strength to the upside. And at this point, we would have phase one. As of this point right here, we have phase one of the Wyckoff schematic. All right, and then we come into phase two right here. I believe phase two ends right here. Phase three, and then phase four is the rest of this. But I want to delete all of those off of here because it's going to make it look too messy. I just wanted you to realize that phase one does end right here. And then phase two is the second buildup of liquidity. But after the sign of strength, we come down into the STMB in phase two, okay? It is another manipulation of the lows. So we had the first manipulation of the preliminary support right here with the selling climax, and then the second manipulation is this STMB shaking out the early buyers, because people were starting to funnel into buys off of this SC and this ST right here, and then people would have been thinking for buys right here, and then it didn't work out because there's a manipulation that has to happen, because literally we're only in the first part of the schematic up until this point. Right now we're in the second part, but you get what I mean. And then after the ST and B, it is the ST in phase B. That's what it stands for. That is the first manipulation. And then we normally come into some kind of liquidity buildup, builds up liquidity on both sides. And this is going to form even more opinions, right? And then this would be the end of phase B. And then phase C would happen, which is literally just the final manipulation. It's the spring. It's taking out all the liquidity. This spring, this big move from here to here, that is typically the composite man or smart money driving the market down, literally putting themselves in drawdown to shake out all the early buyers and take up all their orders, take all the liquidity before doing what? Giving a displacement to the upside. This high right here takes out all this liquidity right here. You don't need to break the entire schematic. You just need to have a displacement of the last low. And then ultimately you have these tests right here, which is just doing what it sounds like. It's testing the spring. It's also where smart money is getting out of their orders that they drove down right here, and then it takes off, right? And then you have these LPSs, which is the last point of support. There can be multiple ones of these, and I know that's contradictory because it says the last point of support, which you would think there would only be one, but there is multiple ones, and they're just basically, in my opinion, what an LPS is just another chance to get in the move, right? If you miss the test, try and get in on an LPS, because there's almost always going to be some kind of LPS. And then this is something that I wanted to point out. This will be for maybe some more seasoned Wyckoff traders. If you take this line and extend it out, there will be a buy up or an LPS start to formulate right here. And almost what this is a reaccumulation, which we will talk about, that happens at the top of the accumulation, and sometimes this will cause traders to get out of their long positions because they think the market is stopping. but actually what it's doing is it's just picking up the last points of support and the orders that are in those last points of support to take to the upside. Study it. I'm telling you, you will see this here happen a lot. All right, so that's accumulation. Now we have distribution, which literally it is just an accumulation flipped over. That's it. There's nothing more to it. If you took every single point of this schematic here, it's literally just going to be the flip side of the accumulation. So first, you have a rally up. You have a preliminary support, which is the first stopping point, the first point of support that the market is finding. And then you have a buying climax right here. It is what it sounds like. It's where the buying stops. And then you have an automatic reaction right here. It's from buyers taking their profits, and then that gives you an automatic reaction of the market going to the downside. It is what it sounds like. And then you have a secondary test right here, testing the buying climax to see if there is any support there. In this case, there is support there, and then it gives you a sign of weakness. And this first part of the schematic right here can be a trap, because people are going to start to sell off of this secondary test here because we took out some previous points of structure right here. But like I said, this is all about manipulation. So the sign of weakness leads up to the UT, which is the up thrust. It is what it sounds like. It thrusted up, right? And then you go into a buildup of liquidity right here. And then you have the final manipulation, which is the UTAD. That is the up thrust after distribution. Because this little buildup of liquidity right here and all this right here can be a minor form of distribution. And then what does it do? It breaks the previous structure that was built up by this liquidity right here coming down. Then you have the test. And then it comes down again. You got another last point of support, and then the LPSY right here, which I said often forms at the end or the bottom in this case of the schematics, and then it continues to keep on going. And now this whole schematic here, the accumulation and the distribution, is just smart money building up buyers and sellers before going in their desired direction. All right, distribution, it is the buildup of sellers and the manipulation before going to the downside. They manipulate the top side before going to the downside. Accumulation. They manipulate the downside before going to the top side. And you can see that happening here multiple times. You have an up thrust that takes out the buying climax. UTAD takes out the UT, starts to break down. All right, so Wyckoff schematics. The next one's reaccumulation. Looks like a distribution at the beginning of the schematic. Often found in trending markets. You'll find reaccumulations after accumulations. And most traders struggle with this because the beginning of it looks like a distribution, and then they'll get smacked when it ends up being a reaccumulation. And I really don't use reaccumulations or redistributions that much or at all, but it is a part of Wyckoff, so we are going to cover it. And a redistribution looks like an accumulation at the beginning of the schematic, and it's often found in trending markets. Traders also struggle with this. And here we have a reaccumulation, and first thing that I notice is it looks ugly, right? Why would anybody want to trade this, right? Well, all you really need to do is look for this part back here, right? Because up until this part, you have your PSY, and then you have your buying climax. That's preliminary supply right here. I just now realized that I wrote that wrong on the distribution. The distribution first point is supposed to be a PSY, a preliminary supply. And then it goes into a buying climax, AR, ST, SOW, pretty much everything that we just seen at the beginning of a distribution, right? It even has the UT and the UTAD inside of it. This is where you need to realize the difference. If this was just a distribution, there would be a strong test right here and a big breakdown. That didn't happen. It starts to formulate more liquidity. This is what some people call a creek right here. I didn't label it because I don't really teach the creek, but it is a way to help you find reaccumulations and redistributions. A creek is often a transfer of weak to strong hands, a transfer of buyers to sellers, sellers to buyers, okay? Because up until this point, we got all kinds of sellers up here, we turn them into buyers, and then we buy up, we test, and then we break the entire schematic. And here's another LPS, like I mentioned, at the top of the schematic. So a reaccumulation can trap even more buyers and sellers in it, because if you are a Wyckoff trader, you will see this as a distribution until the very end. That's why you need to wait for these schematics to play out, because you don't know how they're going to pan out. Because this one, and this is also a flaw in my opinion when it comes to Wyckoff, and this is why I feel some people don't stick with it, is because you could be hardcore looking for a distribution right here, and then this happens, and you may even think this is the test. This first point right here, you might even think this is a test, but when it fails to break down sharply and it just starts to build up even more liquidity, that is your sign to this being a creek and it perhaps being a reaccumulation. What you want to do is wait for this spring, taking out this, and then clearing some structure to the upside, and then testing it to take all the way up to the upside. All right. Now a redistribution. A redistribution is going to be the exact opposite of a reaccumulation, obviously. This should be a PS and not a PSY. So this should be your preliminary support, selling climax, AR, ST, the first half of all the schematics or all the accumulation schematics, followed by your sign of strength, STMB, spring. See, at this point, you have an entire accumulation in this right here, and this is what can help you perhaps learn this a little bit here. Okay, so up until this point, you have the STMB, and then you have the spring, and even this spring leads to a displacement of the last structure, right? And then so say you got in right here, say this was an order block, imbalance, whatever, say you got in right here because technically you cleared this structure right here. Okay, so you are warranted to get in this setup right here. And this is how Wyckoff is a sneaky little... Man, I need to watch my mouth. I almost swore. I'm sorry. But Wyckoff is sneaky, all right? Because at this point, you have a displacement, you have the spring, and then this looks like a test, but then it just comes into this creek right here, and it builds up liquidity on both sides right here. And now if you start to see a lethargic move after you enter the spring right here, then it's a good chance that you are in a redistribution, and you may ride this all the way up here to the UTAD and think you're in good profit, and then just start getting smashed down. And this is what makes some Wyckoff traders mad. This is why you need to wait for the schematic to be complete. But a redistribution can be a very big trap even for smart money traders, which is why I tend to just stay away from them. And they always look different. It's not ever going to just look like this. A lot of times it will just look a lot smaller, and you'll have to go down to a smaller time frame to see the redistributions and the reaccumulations. For instance, this spring isn't always here. Sometimes it can literally just look like this. So say you have it coming up, PSY, buying climax, AR, ST, sign of weakness, and then it can come into the shakeout right here and do something like that. Like literally a reaccumulation can look like that. Alright, so do not trade based on Wyckoff schematics alone. The markets are fractal. Wyckoff is inside of Wyckoff. You can keep going down time frames and you will see Wyckoff is inside of Wyckoff. Top-down analysis plus market structure plus Wyckoff equals confirmation. Alright, that's just a little thing I threw in there. Don't worry about perfect entries. First learn the schematics and the market behavior. You must have a validation of the schematic. Patience is key, and the market is always telling a story. Figure it out. Is the market bearish? Is the market bullish? Are we in a reversal? What are we trying to do? Alright, so let's look at some charts now. Let's go look at some Wyckoff. Alright, so I have GBP AUD pulled up right here, and as you can see, I see some Wyckoff already, and I'm going to draw a box around it just so that you can see it. And now remember how I said Wyckoff is always going to look a little bit different? It's always going to look different. That's just the way it is. And real quick, I want to draw out here what most simplified smart money traders will look at Wyckoff as. Though literally, and I'm not downing anybody, I'm not knocking anybody, because if it works, right? That's all I'm going to say. They will simplify Wyckoff by just drawing liquidity back and forth. That was terrible. They'll simplify it by drawing the market moving back and forth like this, liquidity on both sides, and then they have a sweep, right? And then this would be a distribution because it's a manipulation of the highs before they take it to the low side. And then there would be some kind of order block or imbalance right here, and then that takes it down. That is a lot simpler than everything that I just went over with you. I understand, but I do feel that it's helpful to understand Wyckoff and understand what's going on inside of the schematics, especially if you're using Wyckoff as an entry confirmation. Then it helps to be able to follow the schematic as it happens. And if you never get the validation of the schematic, then you never take a trade. But all right, so obviously this right here is an accumulation, right? And we may have to go down time frames to see some of this, but I'm going to try and do this on the 1 hour. And the first thing I see right here is, now I get that this is not just one solid point right here, but I'm still going to call this the preliminary support. Okay, preliminary support is the first stopping action of the schematic. And then you have your selling climax right here. You got your selling climax right here. And then we have what's called an AR. An AR right here at the top of this little high right here. And I know it's just a wick, but I'm keeping the lower time frames in my mind when I'm doing this. Alright. And I remember I said also, every schematic's not going to look the same. And then you got your ST right here. You got your secondary test right here. Because on a lower time frame, this did come down. This came up. This is the automatic reaction. And then we came back down and we tested the selling climax right here. Then you have your sign of strength right here. You got a sign of strength right here. And then remember I said that you could have multiple STs. And I'm not even going to mark this one right here. But this is just another ST. It's creating more liquidity with the selling climax right here. This essentially all right here, from here to here, is a buildup of liquidity. Build up of the highs, build up of the lows. Now this little spike down here, this is part of the schematic that we need to label because it is part of the schematic. And this is your ST in B, your ST in phase B. That's what that actually stands for. Why is this your ST in B? Because it comes lower than the selling climax. It liquidates all these very early buyers right here. Okay. And remember what I said, it created liquidity right here. There's a whole bunch of liquidity sitting up here. That was a terrible money sign. And I'm pretty sure you should already be able to tell what's coming next if you've been paying attention in this lesson at all. We got the spring. We got the spring right here. So there's your spring manipulating all the entire schematic. And now this schematic, the way this one played out and the way that this one confirmed itself is beautiful. Okay, so you have displacement, a large displacement. You want to see the movement after the spring to be very energetic. And what did we do? We took out highs here. We took out highs of the SOS. And we did not take out this high over here, but that's the next target. And then we got our test down here. This would be your entry point. And this is where the rest of smart money can help you, right? Because if you don't know where to enter, this doesn't do anything for you, right? This doesn't come back down to an order block or anything like that, but what it does come down to is it comes back down to an imbalance, and it just barely gets into it, but it gets into it. As you can see right here, this wick literally just touches into it, and I'm sure that if I went down time frames, this looks like there's an element of reaccumulation right here, and actually that's what we're going to do. We're going to go down time frames, and we're going to look at this a little bit more. So as I go down time frames to look at this, right, if you look over here, I'm only on the 30-minute, but you can see that this created a low right here, and it started to consolidate, and this is just another manipulation of the lows before going back up to the upside, because you got this big down candle, otherwise known as a spring right here, and then displacement all the way up here, and then maybe this wick came back down to clean up this imbalance, and maybe that was an entry there on a lower time frame. I don't know unless I really look into it. This is maybe a little example of an LPS right here forming at the top of the schematic. The LPS doesn't have to look super pretty or anything. It's pretty much just another buildup of orders before the markup, which you see right here. As we move forward, I do want to go over WYCKOFF as best as I can, just in case anybody really likes this method and really wants to use this method as their approach to trading. I don't specifically use WYCKOFF all the time. I only use WYCKOFF when it's present, because that's the only time you should use it, in my opinion. You shouldn't be opening up the charts just looking for WYCKOFF. To be honest, I have trouble when I just go open the charts and look for WYCKOFF. A lot of times I can't find it. The only time I really can find WYCKOFF is when I have my points of interest, and then I'm looking for a confirmation inside of that. Right there, that was a key nugget. Write it down. I do want to go over a distribution yet on this lesson. I'm not going to go over reaccumulations and redistributions because I really don't use them. And I'm not going to teach you about something that I don't really use. Maybe somebody that actually uses them could be the better candidate to teach you about reaccumulations, redistributions. I know what they are and I can see them, but I don't use them myself. Alright, so here we are on USD Swissy, and I do have an example. I'm sorry, I really can't talk today. I have an example of distribution for you, and it's a short-term distribution, but it's the best one that I could find as of this moment. So This is also on a 4-hour time frame, so keep that in mind as well. A lot of price action really went into this for this to develop. WYCKOFF does work on every single time frame. It's fractal. It can work on the daily. It can work on the 15-minute. It can work on the 15-second. But we're on the 4-hour right now, and I just want to show you this before we get out of here. And I also want to let you know that the very next episode is going to be using WYCKOFF and how can we actually use WYCKOFF if we want to use it in our trading every day. Because I understand that me just showing you these accumulations and these distributions and telling you what they are, that's probably not really helpful in the way that you want it to be anyways. You probably want to know, how can I use this, right? So without further ado, let's quit wasting time. Let me just show you what I'm looking at right here. So overall, I see this schematic right here. This is the entire schematic. We're going to put a box around that. All right, and so first, I see the PSY, which is the preliminary support. Supply. I don't know why I keep saying preliminary support for the PSY, but I do. Okay, and then we have your buying climax right here. This is where most of the buying stopped at first. This is where the first buying climax happened, right? And then you have what's called, we'll say AR is down here, this entire fractal. We'll just put it right there. AR is this big movement back down from the buying climax, and then we have the ST, you guessed it. ST right here, followed by the sign of weakness. And what do we have after the sign of weakness? We have a UT. And now I know this UT doesn't really come up and liquidate this completely. It's still an up thrust, right? It's still, there's probably, remember this is a 4-hour time frame, and I'm sure if we went down in time frames that we could see more fractals in here. Like I'm sure there's a high at this top candle right here. And I do want to point out there are other versions of these schematics as well. There's not always a UT. Sometimes there's just a UTAD. Sometimes there's not always a big spring in the WYCKOFF's accumulations either. And the reason I haven't shown you that yet is because I hate those schematics. I absolutely hate them. It just looks like normal price action to me. I really don't even agree with them. I don't agree with using them. I really only use WYCKOFF when the manipulation is there, because the other two versions of the schematics, like schematic version 1 and 2, they don't have a manipulation in some of them, and I don't like them. I don't want to teach them, so that's why we're sticking with the normal accumulation and the normal distribution, because if I threw everything at you, you're just going to be super confused and walk away and never want to trade WYCKOFF, right? And then we have the UTAD up here, the up thrust after distribution, and then we have what is required after the spring in the UTAD? Displacement, right? And we have a low right here. We have a low right there that we come and we take out right here. And then we have what? We have a test. We got the test right here, which if you wanted to trade off of this test, you could have just marked out this big imbalance that was left behind. And that could have been your entry right there, and you could have taken it down to here. Ultimately, I know it goes the other way before leading all the way down here. But nonetheless, the distribution still showed up. It still painted itself. It still printed itself here. It did what it does. Just remember, distributions is the manipulations of early sellers before going to the downside, and an accumulation is the manipulation of early buyers before going to the upside. That's really what I want you to take away from this lesson. And please, please, please don't go into your charts just looking for WYCKOFF. If you want to practice it and backtest it, that's one thing, but if you're live trading, don't just open the chart and be like, where's the WYCKOFF? Don't do that. You're going to get stuck. You're going to get lost. You still want to go with institutional order flow. You want to go with top-down analysis, higher time frame bias, stuff like that. You still want to look for your points of interest, like order blocks on higher time frames and imbalances and which way is the trend moving. Stuff like this. WYCKOFF is a key. No. It doesn't have to be a key element. It can be a key element into your trading. Is smart money, I believe, this is my personal opinion, some people are going to roast me for this, but I believe smart money was originated from WYCKOFF. I mean, it's in the schematics. The dude was drawing this stuff on paper. He was plotting buyers and sellers on paper, and it ended up looking like the WYCKOFF schematics that we have today. This was formulated before they even had electronic charts, anything like that. If it was originated back then and it happened back then, it should still ring true today. Maybe it's changed a little bit with the way the Forex market is run today and stuff like that. But I'm showing it to you in front of your eyes right here. And you can see how I can just label these schematics like I know it like the back of my hand now. And you can as well. So, with that being said, I think I'm going to end it right there. Make sure you rewatch this video if you have to. Make sure you took notes. Make sure you go back into your charts and maybe look for some examples of Wyckoff. Whether it pans out or it doesn't matter. I just want you to go back into your charts and look for Wyckoff. Because when it comes down to it, the people that practice their craft and hone in on their craft are the ones that are going to make it. Not the ones that just come here, sit here and watch the videos and do nothing. You can't just do nothing. You got to do something with the information that you learned. Otherwise, the information means nothing. And before we get too ranty, I'm just going to cut it there. Look for the next video. It's going to be a continuation of Wyckoff. And I will see you guys on the next one. I hope everybody has a good week, good trading week. And yeah, I'll see you on the next one.